All right, what is going on, guys? This is Hugo with Living with Options. We're going to be doing our 30-minute portfolio review just now. I've been away for close to 2 weeks, about 8 to 10 days. So I set up a lot of my positions to expire on the 16th. Um, so pretty much what that means is that a lot of them are going to be expiring soon. But I also want to go through positions of how I set them up while I was away in Africa and just kind of answer any questions that anybody may have. So let's go ahead and dive in. So what's rough? Um, Luckily, it seems like it recovered pretty efficiently. Seems to be a lot of macro events that are affecting the stock market. I think there is a certain sentiment that we're long overdue for some sort of correction, some sort of I don't want to say recession, but correction. I think there's a lot of optimism still for the September rate reduction. Regardless if it's a large or a small amount, I think the general sentiment that it's going to give the market that things are looking better is going to be very powerful. So you may see a jump up, but I don't think it's going to be a long-lived bull run. I think that we're still going to see some red, specifically depending on how the holiday season that is coming up performs. I think there's a general idea that the consumer has run out of kind of disposable money to spend, and therefore the earnings figures on all companies are going to be affected. That's kind of like the general attitude of things. So we'll have to see. All right, so let's jump in here. So one of the main things I want to cover was this kind of optimistic position I had on Mercado Libre. Um, Turns out I actually did fairly well. I left a lot of money on the table, but considering I had to do a limit order because I didn't know if I was going to have access to the markets or not, I think I exited pretty fairly. But let's take a look here. So remember, I had bought the 1680 call buy. I bought the option for right here. I believe it's what it was. Yeah. Yeah. Is that right? 45? No, that's. Oh, those are the. Okay. Those are the options that I sold on the position while I waited. So pretty much what ended up happening is Meli, which is the Amazon of Latin America, completely blew through their earnings. And it rallied completely because I was down about 50% at one point on this call option. So I bought a 1680. Let's go down here. So I had bought a 1680 call that expired on the 16th for $10,600. So it's a pretty hefty position. The play really was that there was going to be a stock split, which I don't think actually happened, but they did so well on their earnings that it still rallied. So while I was waiting for the earnings, which happened August 1st, it did kind of correct down to like the 1650s. So I was down about 50% on my call. So I decided to sell calls on it while I waited for earnings, knowing that that was going to be the catalyst. So I sold one contract at 1050, so $1,000. Here you can kind of see it. I sold it back. I sold another one, bought it back. I was very hesitant in wanting to keep them open for too long, just because I knew it was going to rally at some point. Long story short, I ended up selling it for $13,000. So give or take, I may have done a profit of $4,000 to $5,000 on this particular trade. But I sold it for $13,000 just out of curiosity. Let's see what it traded after, because I got rid of the position as soon as earnings happened, and it was up like 10% overnight. I got concerned because I didn't know if I was going to have internet later, but also concerned that there was going to, it was going to be an earnings spike. So I said, you know what? I made money. Don't get greedy. Pull out and enjoy the rest of your vacation. So that's what I did. Sold it for $13,000. If I was to have held it, even until expiration or even a little bit longer, Meli's at 1883. So, that, let's see what that particular call option, the 1680, is now trading at. $21,000. So I literally could have 2x'd my money if I had just waited, or further x'd my money. $21,000. That's crazy. But don't get greedy. Profit is profit. Learn from it and move on. That is the mantra. You're going to have a lot of successes and you're going to have a lot of failures. The idea is for your successes to be more than your failures. That's a successful trader. What else happened? So I had a couple SoFi positions that got assigned. I was actually trying to generate cash. I'm trying to generate enough cash to actually purchase the shares that I have on my Tesla position call. The one call I haven't exercised or sold. I'm actually going to exercise it. It's a 175, so I need about $1,000 more, and I had some SoFi 650 puts open that got assigned. So I just wheeled those currently, and I wheeled them and basically just made a slight profit on it. I'll kind of go through that trade in a second, but let's go ahead and start at the top. So right now we have some American Airlines $11 puts. American Airlines is trading in the low 10s, high 9s, I believe. It's at 985. I have an $11 put. Truthfully, I do think that travel overall is going to increase during the holiday season. I think that's needless to say. I do think we'll see a rally on American Airlines. So what I'm going to do with this particular trade is just keep rolling it out and down until I eventually get it to $10. I think at $10, there will be a time when I can just close that out for a profit and not have to close it out for a loss. Right now, it's not a significant loss either. It's 147, and I have until the 16th. So it's not a significant loss, but remember, I have been kind of rolling those out too. So make sure you look at your tracker. And if you guys need me to do another video on this, I will. But you have to make sure that when you roll, you can still roll for credits or you can roll for debits. But the idea is to keep track of your premium, so that way you know exactly when your break even point is, so you can pull out of a position early if you need to, right? Because you may look at this position and it says, yeah, I'm up 20% or 30%, but perhaps in reality, yes, it's 30% on this position itself, but if you look at all the premium that you've rolled down at a higher profit to actually break even. So just something to keep. This was just really to give an example of of how to use a poor man covered call and really myself to go through the math of it and see how it works and when it works, and really the conclusion is the underlying stock has to go up. I mean, that's very self-evident. If the position itself doesn't go up, then it doesn't matter how much premium you generate. You won't generate enough premium to cover your cost basis. It may be a smaller loss, but you still won't cover your basis. So pretty much what I'm doing right now is I opened up a call option on Amazon 2x bull shares, and I pretty much bought a call. We'll see it right here. So I bought a $30 call that expires in September 20th with the idea to just write calls on it all the way up, right? Because I thought Amazon is a phenomenal company and it still has a lot of growth in it. So I bought it for $590, and right away I sold an 816, 156. So I'm taking $156 off my basis. Obviously, it's nowhere near 138, but here's the thing: I bought it for $590, right? And this $30 call is now worth. So obviously, the $38 call is almost, I'm just gonna let that expire worthless. But if we look at the call. Call is worth $93, so I've lost about 400 and change already, 497, right? So sure, I may be able to sell maybe another call on Amazon and maybe bring in another $150. That's 300 off my 590. That's it still leaves me at a $290 loss. Even though the traditional bread and butter covered calls, sell calls, own the actual shares. Knock on wood. Hopefully it doesn't happen to you, but you're stuck with a position that just moves up and down. It doesn't really make any gains for a year. That premium that you made is profit, but you still have your shares, and that basis hasn't deteriorated. If you do the poor man covered calls, sure, you can make more money on the premiums, but that basis is deteriorating if the price doesn't continue to move up. So you really have to have a bullish long-term view of the company for those trades to make sense. probably one of the best Bitcoin mining companies out there. So this position right here, it's down to 1150. I'm not very concerned, and honestly, I may even open up my position on CleanSpark. They had actually decent earnings where they're about to turn a profit. So I may open up a position there, but essentially what I'm going to continue doing with this one is just rolling it out and down. Very volatile stock, so it may even reach 18, 19 again in the near term, at which point I would exit my position. But right now I'm just going to go down and under. I am at a fairly, I don't want to say large loss, but it's, it hurts, $2,500 potential premium, but really a $1,400 loss. So this one will just continue to roll out and out. I mean, it's as long as the the Bitcoin market continues to be stable and increase, I think this company will perform generally very well. Palantir. So this is a position that I'm going to be looking to increase my position in. I think the recent partnership with Microsoft is something you have to look into. I think it's unfortunately this is one of those companies that's going to benefit from the increase in warfare that we're seeing around the world. So it gives it a great opportunity to for these military complexes to really look into this stock and increase the amount of contracts that it's getting. I mean, it's getting contracts after contracts, and it's becoming sort of like a breaking into that industry or breaking into the defense kind of industry in the U.S. is very, very difficult. So, and I think Palantir is finally getting to that point. So let's look at this trade right now. I have 100 shares of Palantir. I mean, it's a very small position. 4 is my position right now. So I'm up on my position about $200. Very small position, 1.8% of my portfolio. And so what I did is I sold a $30 call on it, which, if I'm not mistaken, may have been also a roll because it was already hitting $30 last week. Let me see if it's correct or not. No, I don't believe it is then. I think it's just a new position. I had another $30 one. So anyways, I sold a $30 call on it for $111, which expires this week. I think Palantir right now is exactly at $30. So honestly, I may let this. I'm not really sure. I may want to hold on to these shares, but I'm going to see if it's where it's at because $30 is a very strong price for it. It guarantees me pretty much a 15, 20, 30% return on this particular play. But I also don't want to. I want to increase my Palantir position, so I may just roll that out if it gets to the 30. I'm going to hold on to these shares. So that's that. Let's see. So Snow is another one that's a very interesting one because it's doing a lot. Basically the story with Snow is that after the CEO left, they had a very dramatic fall down from like the 200s to now it's in the 120s, which is crazy. But it's still a very phenomenal company. It's doing a lot in the AI space. It just had a partnership with OpenAI, I believe it is. And so, it's a very strong company that I think just has gotten very bad reputation, and it's also kind of starting to find itself. But I do see this performing fairly well in the future. So I have this 134 put, which I think I started this position at 136, and I've just been rolling out and down. And truthfully, I probably will continue to do this. I think at 124, Snow is extremely undervalued. So I'll probably just continue to roll this out and down for profits, for credits, until I finally catch a tide. Like you can see this right here, this 120 put. I'm not going to reopen the positions on this one. This one I'm just going to let expire. I'm already up, 300 change, $300, 50%. I'm gonna let this one expire worthless. I don't want to have a very large position in Snow because truthfully, that's not one of my main horses. And, I don't really follow that AI space as close as I would like to. So I'm going to just leave that one to those 3 contracts, the 134 contracts, and really try to get out of those. So SoFi, let's see what SoFi's been doing. SoFi is a very interesting stock because it has so much going for it, and the general financial narrative is pretty good. It has a strong leader, but it just can't catch a break. And it's very clear that lower interest rates um, are very net positive for this company. It's going to influence the stock price tremendously, as it will a lot of banks, to be quite frank. But this one in particular reacts very well to it. So, I think it's very clear that we will have a rate reduction in the near term, whether it's in the next quarter, 2 quarters, 3 quarters. So I'm going to just continue selling puts on SoFi as well as calls on my existing position until you know until nothing, until this is a great profit generator. To be quite frank, it's the premiums are very good. It has a pretty stable floor in the sixes, 615. So I feel pretty comfortable selling 6 and 650 puts. um, it doesn't seem to hold its gains for some reason. It will one day. I think one day it's just going to blast through it and just set new limits, new floors. But for now, it's just not holding any gains until the macro environment financially improves. So it's a great time for predictability. So looking at SoFi real quick, we have a couple positions open. This is probably the second largest position in my portfolio. It's about 6% of my portfolio. Tesla is a good like 99%, 94%. So my average is pretty high, 744. Right now I have a few positions open. So what had happened was I had sold $15. What was it? Yeah. That's something that we can go into later. But essentially I got assigned on some $7 puts, and I went ahead and just sold in the money puts at 650s because I really wanted to get out of that position, and they finally got assigned, and I think I made a small like $200-300 profit. So overall, it was a very, very good play. But yes, I had about 3,000 shares, just reduce those to 1,500 to generate some cash. I have $5, I have $7 calls that expire on the 16th. I'm just gonna let those run. I really, honestly, if it does reach $7, I may just let them get called away. Um, but I'm not concerned about these $8 calls. I'm obviously not concerned, and I've started to throw in these higher low premium, um, very high delta positions, just because with Tesla I really learned my lesson where it just rode up to 260. Luckily, I may be in a position to close out those contracts, and free up shares, but I did learn how easily you can get caught in these positions. So that's just something I did to just protect myself on the upside. I sold some 650 puts. Very happy with these. I mean, I don't know if I'm going to take ownership of them, but I'm fairly confident in these not being exercised. Other 650 calls that I sold longer term. And then I have that one long dated call. So that I'm trying the poor man cover call on again. So it really just comes down to the math, right? So that's where SoFi is next. And lastly, we have our Tesla position, which, as you guys all know, I got caught underwater. I think my strike price is 205. Luckily, my position is phenomenal. So I have, let's actually check it out. So Tesla's at $200, which boggles my mind. This is my theory. My theory is that Tesla, I think Tesla for the October 10th auto taxi event is going to impress a lot of investors, and you may see this spike back up to the 230s, 240s, because here's what's going to happen. The conversation is going to shift from, holy shit, they have FSD semi-solved, or there's a path to getting it solved. And the narrative is going to change, or the valuation is going to change to, all right, what are the financials on this, and how is it going to impact our bottom line? How many rides can you give? What's the basis of what are the margins, right? So it's gonna now treat FSD as a reality and try to back into a number. And I think personally the shares are going to be negatively affected because there is going to be about a 1 or 2 or maybe 3 year gap between the FSD technology being significant on the balance sheet. I think Tesla Energy right now is more significant on the balance sheet, and look how the market doesn't really even value that segment at all. It still truly is an auto company. So, and I don't think we're going into very, not a lot of people are going to be getting new cars soon. I'll tell you that much. So that's why I'm not very bullish short term on Tesla, but I am long term. which is great for my position because I really need these to expire by December worthless, right? So looking at my position, I got 172.80, 900 shares. I'm about to exercise a call option to get those 1,000 shares that I've always wanted. I'm doing fairly well on the position, but look at my calls. Look how up my calls are, right? And why is that? Because I rolled these up when these were in the 260s, 240s, 250s, 260s, and I took advantage of a lot of that implied volatility after having such a huge run, that I banked a lot of premium. And the reality is that a lot of my position is in 205 calls, which right now are out of the money. So if this continues around this, really a lot of this $2,500 kind of cost, if you will, on the call is really just time, right? Because it's all extrinsic, as TJ the Wheel Deal likes to explain, and he explains it very well. There's just a lot of extrinsic value because there is no intrinsic value. It's below, it's out of the money. It's below the strike. So it's all time, right? So the longer I let this eat out and just kind of break down, the more money I will make. And you can see here, $28,000 on this is absolutely mind-boggling, right? So we'll keep going with this. Let me show you guys my other positions on Tesla. So 205 is kind of my big one. The reason why I have this call option is, again, because I was doing poor man covered call campaigns on Tesla on the way up. So I had bought this $175 call back when Tesla was like in the 160s, to just sell calls on it. And that's what I've been doing. And so you can see here, I'm up 54%. I bought it for 1,600. Right now it's worth 2,500. So I can sell it. But what I'm going to do is I'm actually going to exercise this and take possession of the 100 shares at my basis of what is this, 175. In reality, my basis is somewhere between 175 plus my cost, 16. So 175 plus 16. So my basis is somewhere between 191 and lower, because if you take into account the premium I've collected during these couple weeks, it should be below 191. So let's, ballpark 185. It's still a phenomenal trade. So I'm going to exercise this. Now, because this call expires on the 16th, it doesn't let me sell calls further out than the 16th. So that's really, this one is at 195. So this is one call here that I may be able to recover. I'm going to exercise this on the 16th. Hopefully, maybe let 195 expire worthless, or I may really just roll it out. Roll it out. I mean, it's only at 200, so I may just roll it out and do that. But I mean, look at the amount of premium I've made on this, dude. $4,000, 4,400, 83%. It's a $5,000 position that is worth $800 now, right? And remember, there's always another side to this. Because I sold this call, that means that somebody somewhere bought this call. Okay, they paid $5,300 for this, and it's worth $800 right now. So just keep that in mind, because at the end of the day, even though we're behind screens and we're clicking here and there, this is primal. You're fighting for somebody else's cash, somebody else's ability to put food on their table. And there's always, always, always somebody on the other side of that trade. And it may just be some hedge fund company that, whatever, they treat this as a number, but it also could be, a teenager doing his first trade. You never know. So anyways, long story short, we got Amazon, Tesla. I've got these Tesla credit puts. So I really try to avoid credit spreads. And the reason is because I've gotten burned a couple of times with credit spreads, and Robinhood doesn't allow you to roll out your credit spreads. So you really do have to close them out at a loss. And, the losses can get exponential if the stock, outperforms. Like if you had sold call credit spreads on Tesla at 200, 210, you could have blown up your whole portfolio on that run up. Now the only reason I feel comfortable doing this trade is because, number one, since you're buying a put, if it does correct all the way down, you're making significant money on that put, right? So right now, for example, I sold the 170s, but I bought the 160s. I could hypothetically sell these 160s, right? These are at a significant profit, $1,400 profit, and then turn these into cash secured puts, right? Which means that it would take a lot more collateral, but I'm already banking a $1,500 profit. And the reality is that for Tesla to go from 200 to 170 by December is not very, in my opinion, probable. And if it is, you can always just roll them out. So there's an exit plan to this trade. But for now, I'm going to leave it as such because I have my protection here with the 160 puts, and it also covers my collateral requirements. So this really only requires $1,000 of collateral per. This is only a $5,000 collateral trade here, So what I may do is I'm going to just leave this and just let it run. This is just something I'm gonna just tag and forget about. What else do we have here? That's pretty much it, guys. These are my positions right here: 900 shares, Tesla, Palantir, American Airlines. I got assigned here, so I'm looking to just sell some calls on it when we see a green day on Monday, hopefully. 15 on SoFi. IGIC is just a stock I'm keeping an eye on. It's a very good insurance company. And then CleanSpark, just one share to kind of mark my basis and get notifications. But that's pretty much it. Pretty healthy margin buffer right now. I am going to try to reduce my margin as much as I can, kind of brace for a storm here. In my opinion, just a short, I think it's just going to be a winter. I think the consumer is weakening, and we're going to start to see that. I think there's a lot of expectation that rate reductions are going to save us, and the reality is I don't think so. I think we printed far too much money. It's going to get rough until the election, and depending on the election, you're going to really see if what the optimism or the pessimism is coming in. So we'll have to wait and see on that. But again, guys, thank you for watching. Are there any questions that anybody has? Anything I can help answer? Just go ahead and write it in the chat, and I will address it here. But apart from that, we're in 27 minutes, so we nailed it on the 30 minutes. Thank you for watching. Hit the like button, subscribe, and I appreciate you guys watching. We'll see you next time.